Hi everyone, this is KAF here. This video is going to be talking about the crazy volatility that we've been seeing from the market over the last couple days. Today is February 7th, and I want to talk about the flash crash that we saw on February 5th and the effect that that had on some of the bearish ETNs like UVXY, VXX, and TVIX. Perhaps you've heard of some of these before. Perhaps you know a lot about them, or maybe you don't know anything about it at all. I want to try and help explain the correlation that these ETNs have with the market, and I'll even explain what an ETN is and what an ETF is and how they differ from stocks and things. Before we get into that real quick though, here's my website, kafinvesting.com. We'd love to have you come join the chat room on a free trial, see if you like it, see if you like trading with us. We have an incredible room, incredible traders. It's a great environment to learn how to trade. So if you're interested, head to kafinvesting.com, fill out this form here, and we will get you started. All right, let's get talking about the more exciting stuff here. Up top here, I have the TVIX chart, and down below, you'll see I have the DIA, the QQQ, and the SPY. Now, I want to start off talking about these three down here. The DIA represents the Dow Jones Industrial Average. The QQQ represents the NASDAQ, and the SPY represents the S&P 500. Now, what are these? Maybe, I'm sure you've heard of these before, the S&P 500, NASDAQ, Dow Jones. Well, these are indexes that represent the overall market. Okay, the S&P 500, also known as the SPY, represents 500 companies. The NASDAQ represents a group of companies, and the Dow represents a group of companies. It is no surprise that these charts all follow each other. Look at these three charts. Look at the morning spike that these had on Tuesday, February 6th. Big morning spike. These charts follow each other almost like a mirror. They're almost identical, right? Now they're not identical, but you almost wouldn't even be able to tell the difference from them, all right? And that's because the overall markets will move together. These are our indexes, okay? These are also known as indexes, the Dow, the NASDAQ, and the S&P 500. So if you ever hear someone say, oh, the market was up 2% today, or the market had a great day today, the market's been really strong recently. Well, you can look at these indexes to gauge that and to get those numbers from. So that is the indexes, and that's really important to know as I talk about the TVIX here, UVXY, and VXX, is that's going to explain, what all these have to do together. So here's TVIX. Again, as I mentioned, TVIX is an ETN. Now, an ETN basically represents the value. The best way to explain TVIX is that it represents the amount of fear that is in the market. All right. And so if the overall market sells off, say 1%, well, then the TVIX, because it is actually leveraged, it's a leveraged tool to trade. It's going to make a significantly greater move. So if the market sells off 1%, TVIX could move upwards, 5, 6, 7%. Okay. The best way to think about TVIX is that it measures the overall fear in the market. So when the market is selling off badly, well, TVIX is moving upwards big time. Okay. That's the same. It's very similar with UVXY and VXX. And if we were to get more complicated about it, TVIX and things, they trade off of the VIX, which is actually a non-tradable measuring stick, again, of basically the fear of the overall market, as well as the volatility. I'm not going to get too into that, but just know the best way to think about this is these bearish ETNs like TVIX, UVXY, and VXX basically represent the fear that's in the market. So the more fear, the higher the stock goes. And that's why you will see these are opposite. As the stock market spiked on Tuesday morning, what happened to TVIX? It sold off Tuesday morning. These really are just the inverse of each other, all right? This will do what basically the opposite of what the market does. And it's not an exact science, but it's very, very close. Now, for a long time, large hedge funds have been shorting TVIX. And the reason for that is because TVIX is naturally designed to decay over time, especially when you have a really strong market. So let me show you this chart here. Let's just look at it over its lifetime. Look at the value of the TVIX and how far it has fallen. Okay. So naturally, what lots of traders will do is they will short TVIX, large hedge funds, and it's just been really, really easy money for a long time. And it's super easy money until we get something that happened on February 5th. Let me show you what happened on February 5th here. As you already know, this is TVIX. See this huge spike we have here? Well, this is when we had the flash crash on February 5th. Let me show you on the overall markets here. I'll show you the similarities. Got to go back here a little bit. Right here, you see this? This was February 5th where the Dow dropped to minus 1,600 points and ended up finishing with the largest spill, the largest decrease in overall points ever in the entire history of the market. So what happens as this market sells off? Well, fear is increasing when that happens. So look at TVIX. It soars from $7 to $20. Okay, that's the kind of moves you can anticipate when the market is panic selling that. All right, so let me get my charts lined up back here because what I want to talk about today is I've traded TVIX multiple times over these last 3 days right here for insane profits, and it's been fantastic. But the one trade that I actually want to focus on is actually a losing trade. Well, that's not true. I actually did still profit off of it, but I traded it like it was a losing trade. I traded it poorly, and I want to learn from that mistake that I made. Again, as I said, I actually did end up winning this trade, but it was such a terrible entry that I told myself, I'm going to make a video lesson about this. So just to help remind myself to not make that same mistake again, and perhaps I can help someone else not make the same mistake. Now you see, let me explain what I did wrong. You see these gray bars here, these boxes. These gray boxes all represent the same time frame between about 9:35 to 9:40 a.m. Mountain Standard Time on February 6th. Okay, so this is the same time frame, these gray boxes. Well, I bought TVIX right here in this gray box between 9:35 and 9:40 Mountain Standard Time. I bought TVIX, and as you can see with the immediate sell-off, it was a bad entry. I bought basically at the peak. And shortly after I did it, I knew I had made a serious mistake. I'm going to explain what that mistake was, and again, I want you to not make the same mistake I did. So again, remembering that these gray boxes are the similar time frame, here was my mistake. You see these red lines here down at the bottom on my indexes? This represents support. Now, what is support? Support is a level that is holding up the stock market, that is holding up the stock. So just like, imagine the floor of your second story home. Imagine that as support, keeping everything up on the second story. Okay, it's similar to these stocks. Stocks have support, and so this red line is indicating that level of support. You see this very critical area, bounced off that support here, bounced off that support, bounced off that support. So the reason why I bought when I did here was I was anticipating these indexes to crack under this support. Now, this is why this is such a bad idea. You don't want to anticipate that. You don't want to buy a stock right above support. Instead, what you want to do is wait for it to go under that support, and then you can expect it to follow through downwards. So remember, this might be a little confusing because these are the opposite of each other. I was not actually buying these indexes, but instead I was waiting for these indexes to fall under this critical support level, and I wanted to buy TVX at that point, TVIX at that point, and expect it to move upwards as the indexes moved downwards under support. But my mistake was I bought it too early, and what did it do? Well, it basically bounced off of that support and retraced. The market's retraced. So what does that mean for TVIX? Well, that means it sold off. All right. So this is just a really rookie mistake, and I was really quite disappointed with myself. I haven't made this blatant of a mistake before, but as the markets were coming down, I said, you know what, I think this is going to fall through this level of support. It's testing support. I think it's going to fall through, especially with the big crash yesterday, and it didn't. It ended up bouncing, moving upwards, and now just so silly of me to not wait until it confirms the breakdown before buying TVIX. Now, having said that, as I mentioned, I did end up winning this trade. I ended up averaging down on this because I was very confident of the overall volatility of the market. So I ended up averaging down and selling up here, I believe in this low 13 area. So I initially bought here at the, I think 1360 or 1365. I averaged down here at the $10 area or so, mid 10s. And I ended up selling for profit here, but only because I averaged down. So yes, I won on the trade, and I was very confident that it would come back, but I still was so disappointed in myself that I made such a foolish mistake of buying this, buying this before this had fallen through that level of support. So I hope this is helpful. Here's something else to keep in mind with TVIX, okay? TVIX is not a regular stock, okay? It does not trade like a regular stock. The technical analysis, you might as well just throw it out the window. There is no fundamental analysis. When I'm trading TVIX, I don't actually watch the TVIX chart. While I trade TVIX, I watch the overall market charts. I base my entries off of the overall market's levels of support and resistance and breakdowns and breakouts. And so with a normal stock, I will wait for the stock to go over certain levels of resistance before buying it. We call that a breakout over resistance. But with TVIX, it really doesn't matter where the chart is in relation to previous highs or lows or where previous support was or anything like that. Instead, you want to pay attention to the overall markets. Okay, TVIX is not a regular stock and it should not be traded like one. All right, it's really goofy, and a lot of people, because of this flash crash on Monday, February 5th, people are all just finding out about it and they really have no idea. That people are talking about these ETNs saying, oh, previous support is here, and oh, there's, I really like it to do this for this technical reason, but it's just not quite how it works. Now, if you want to talk about the overall markets and what you think might happen and the technical reasons and important levels, then okay, that's one thing. But the TVIX, UVXY, and VXX are different. All right, they trade based off of VIX, and if you want to learn more, there's a lot more reading. If you want to get more in depth about what TVIX and stuff do, you can go ahead and Google that, and you'll find a lot more information on that. So I hope this is helpful of how to trade these stocks. The best way to trade them, really, because of the insane volatility, is typically enter initially half size and then either average down or average up as the market, either breaks down or breaks out. Another thing is you want to be really careful with stop losses when you're trading TVIX, because the insane volatility will likely wipe you out very quickly. So that's why I recommend taking a smaller size and then allowing a stock more room to move. And so be very careful with scaling in, scaling out, and with your sizes. So this wraps up my video here on TVIX. Basically, the most important thing, I never trade these. If it's not, unless the market's doing something really crazy like it did this week, I will not trade TVIX, UVXY, really. They're not really safe plays, and they're naturally designed to decay over time. All right. So anyways, this is KAF again. I'd love to have you come join us. Head to kafinvesting.com. Comment on this, like this, subscribe. I'll be continuing to produce more and more videos that hopefully are helpful to the public.